Now let's say you or personally, I would love to engage with angel investments this year and maybe next year and all the years following that. If you had an advice for smaller investors, angel investors, small ticket investors, what would be sort of your go-to advice to navigate the early stages or the first days of becoming an investor?
Yeah, that's also a good question. What would I recommend? I think it's important to understand a specific domain. In this case, Web3. We talked about it. It's important to understand how people are. That's the topic around outreach, communication. You need to create an image of the world here to not be erratic, but to have it in a systematic way. And another point which I did not mention so far is, I think you always have to have multiple alternatives, right? It's very interesting to look at one startup, but you can only judge or assess specific startups when you have 3 other startups at hand, such that you can compare what might be the best decision to invest. In case you are left with only one startup, then the probability might be high that you are investing, but but you didn't see the entire breadth of what's possible out there, right? One point is also the multiple effect on the potential gain in valuation, but also across the time span, right? So what do you want to have? Ideally, you would like to have the shortest time frame and the highest valuation, right? This is what you have. Maximum multiple in the shortest time frame. And what you do not want to have like is an endless time frame over years, and then only a multiple of, say, 5x. This is what you not want to have. And trying to map business chances or startup chances in these two metrics makes also much sense, because this is what you would like to optimize. And then the question is, for example, would you rather invest in a startup where the valuation is 40 million or where the valuation is 4 million? Yeah, it depends, right? From 40 million to 400 million valuation times 10, that's a tough game. In case you would like to build a 400 million valued company, this company is having a lot of revenue, a lot of employees, a lot of structures, and it will take years to build it, right? From 40 to 400 is 10x, and you saw here a 400 million company is a lot of work. From 4 to 40 is also 10 million, is also 10 times, 10x. But potentially it could go a little bit faster because of 40 million companies might only have a couple of million revenue, for example, not necessarily dozens of million, right? This could be easier achievable, especially when you have a high dynamic market, regulation intensity is low, and customers might even be international, right? So therefore, putting this all in a box, like the absolute amount of valuation, which is directly connected to the multiple, and then putting this into perspective with the time frame you potentially could achieve this, putting this together, I think that makes a very nice information or a very nice trigger point to then decide how long does it take for the company to get the multiple, how high is the valuation already, will it increase or not. I make a very naive example here, and then you will understand immediately what I mean. Would you invest in the company called Facebook Meta right now? Would you invest or not? That's the point, the question is, you would only invest in this company when you expect a multiple in terms of growth, which is rooted in revenue growth. Will the revenue growth of Facebook and Meta increase? Not necessarily, right? Just renaming the company to Meta doesn't solve the problem that social medias start to function differently. And we also see metaverses coming up from the decentral domain. So the decision to go into the metaverse might not work out on the long run, leading to a high multiple. So it might even look like that the stock price would be flat or would even decrease, right? You don't know. So why is this? Because the valuation of Facebook is already so high, like billions. The valuation is so high that it might be difficult to create yet another high multiple with the current situation. And if the high multiple would be there, then it would take a hell lot of time. Therefore, this would be an example where you should be skeptical. Why is Facebook still better than many other startups? Because at least you have it in a liquid stock. Yeah, you can decide to divest and get the money back, right? This is what you can do with startups, but what you with stock market listed companies, but what you cannot do with startups, right? With startups, the money probably is locked in at least for 2, 3, 4 years, I would guess so. And in case the metrics don't really fit, then the money is locked in for 8 years or 9 years. Yeah, that's something you just have to expect.